All right, welcome back. Today, we're going to break down a really powerful framework from ICT that's all about conquering the T-bond market. We're talking about a specific way to structure your entire trading day. Welcome to AI Explains ICT. This video is diving deep into the core content from Month 10, Episode 7. I'd really suggest you grab a notebook for this one, because we're about to lay out a roadmap for the trading day that can seriously clarify your entire approach. So let's just jump right in. The big question we're tackling today is this: how do we stop just, watching the clock tick by and start actually structuring our day in the bond market for way better analysis? Well, ICT has a very specific framework for that, and that's what we're here to unpack. So here's what's on deck. We'll start with the main idea, which is split sessions. Then we'll break down the London, New York AM, and New York PM sessions one by one. After that, we'll look at some real chart examples to see how it all clicks into place. And then we'll wrap it all up. Sound good? Let's go. All right, first things first, let's talk about the core concept here: split sessions. The best way to think about this is like creating a special trader's daily clock just for the T-bond market. It's all about knowing what to look for and maybe even more importantly, when to look for it. So according to ICT, the bond trading day makes a whole lot more sense when you break it down into these three main blocks. You've got the London session, the New York AM session, and the New York PM session. And get this, each one has its own unique job, its own personality, if you will. And here are the exact times for that clock. And this is super important. These are all New York local time. So the London session, that's from 2 a.m. to 5 a.m. The New York AM session runs from 8 a.m. to noon. And then the New York PM session goes from noon to 3 p.m. You really want to lock these times in because these specific windows are the foundation for this entire model. Okay, let's dig into that first block, the London session. Now, it's really crucial to get this next part. Its role is probably not what you're thinking. It's not about trading. It's all about setting the stage for the main event that's coming up in New York. So, just to lock this in tight, when we talk about the London session in this context, we are only talking about the period between 2 a.m. and 5 a.m. New York time. That's it. It's a tight 3-hour window, and its job is super, super specific. Okay, and this is the key takeaway for London. ICT is very clear about this. You are not supposed to be actively trading bonds during this session. Nope. Instead, its purpose is purely for analysis. Think of it as your intelligence gathering phase. This is when you're on the lookout for the overnight highs and lows, you're pinpointing where all the stop orders are probably clustered, and you're locating those critical levels like liquidity voids and fair value gaps, the spots that could become magnets for price later in the day. All right, now let's move on to the New York AM session. This is where all that London prep work starts to pay off. ICT calls this the main event of the trading day. So listen up. This is where you really need to focus your attention. So this session gets going at 8 a.m. in the morning, and it runs straight through until 12 noon New York time. This 4-hour block, this is where the real action starts. So what makes this session so special? Well, for starters, it's when the biggest wave of volume hits the market for the entire day. And because of that massive influx, it's almost a guarantee that this session is going to form either the absolute high or the absolute low of the day. And here's a pro tip for you. Sometimes the most important move of the day is already done by 11 a.m., right around the London close, so you got to be ready. And don't just take my word for it. Here's a direct quote from ICT that really hammers this point home. The largest volume is seen between 8 and 9 in the morning, or generally before the equities open. What does that tell you? It means the very start of the session, even before the stock market rings its bell, is absolutely critical for bonds. In fact, ICT even shares his personal kill zone for trading bonds and other stuff, and that's from 8:20 a.m. to 11 a.m. That was his core workday, the time he was laser-focused on execution. Okay, so if the AM session is the main event, then what's the deal with the afternoon? Well, that brings us to the New York PM session, which ICT perfectly frames as the consequence. Think about that. Its behavior is a direct result of whatever happened in the morning. This final main session runs from 12 o'clock noon right up until 3 p.m. This is the afternoon slot where the market basically just digests everything that happened in that busy morning session. Now, during this PM session, one of three things is usually going to happen. You'll either get a continuation of the morning's trend, a complete full-blown reversal, or Just a quiet consolidation where the price pretty much goes nowhere. So how can you guess which one it's going to be? Well, here's how to think about it. The AM session is when the big money places its major bets for the day. So the PM session is either the rest of the market piling onto that trend, or it's the smart money taking profits and causing a reversal, or everybody just decides to take a break and we get consolidation. A big clue is this. If the morning had a massive one-sided move, there's a good chance the afternoon will just be dead quiet. You might already be done for the day.
Okay, the theory is great and all, but let's see how this stuff actually plays out on a real price chart. We're going to walk through a few examples and apply these session rules so you can see it in action. All right, take a look at this first chart. You can see the London session marked out in red. Now watch what happens during the New York AM session, the green box. See that sharp move down? It takes out the earlier lows, but then it immediately reverses higher. That, my friends, is a classic Judas swing. It's a false move designed to trap traders on the wrong side. Once that low is locked in, the market just explodes into a strong rally that continues right through the PM session in blue. It's a textbook example of the AM session setting the low and the PM giving us that beautiful continuation. Okay, now let's look at a totally different scenario. In this one, the AM session pushes hard to the upside, and it creates the absolute high of the day right around noon. But then, almost as soon as the PM session kicks off, boom, a complete reversal. The market just sells off for the rest of the afternoon. This is a perfect example of a market reversal profile. The AM session sets that extreme high, and that gives you a fantastic opportunity to anticipate the opposite move in the afternoon.
Now, this last example is a little more complex, but it's really cool. During the AM session, you see the price trade aggressively down, and it takes out the lows that were formed back in the London session. ICT has a great name for this, a turtle soup. It's basically a stop run, where the market is hunting for liquidity sitting below those old lows. But by running those stops and then reversing, it successfully establishes the low of the day. And look at this. This setup actually offered a couple of different entry opportunities, one on the initial reversal and then another one on a little pullback right at the beginning of the PM session. Beautiful stuff. Okay, let's wrap this up and bring it all together. Let's recap this whole framework, the trader's daily clock for bonds. It really just boils down to a simple 3-step process you can follow every single day. Step 1. During the London session, you are the analyst. You are not trading, you are gathering intel, identifying key levels, and getting the day's context. Step 2, you focus all your energy on the New York AM session. Your one job is to watch for the high or the low of the day to form. And then, step 3, based on what you saw in the morning, you anticipate the PM session. You prepare yourself for one of those 3 outcomes: continuation, reversal, or just a quiet consolidation. So there you have it. If you found this video helpful and this breakdown made sense, do me a favor and hit that like button. And of course, subscribe to the channel for more deep dives into ICT's content. And hey, if you've got any questions at all, just leave them in the comments below. A real human reads and replies to them. Until the next one, stay safe and safe trading.